Hi everyone, my name is Robin Speziale, and I'm the national best-selling author of Market Masters. Today I'll be sharing with you the 22 investing lessons from Jason Donville of Donville, Kent Asset Management. My full interview with Jason Donville can be found in my book Market Masters, which is available at Chapters, Indigo, and Kohl's, as well as Costco and Amazon.ca and .com. Here are Jason Donville's 22 investing lessons. Number 1, you can get the macro thesis right, but still not get your stock picks right. Number 2, if I'm adding to a position or subtracting from a position, I don't want the market to know because I don't want people to front run me. Number 3, where the growth of the world is coming from is new product development and knowledge-based industries. Whereas 99% of us already have chesterfields, and maybe 1% of us are going to replace our chesterfield. Number 4, think about the market as a baseball game. Let's say there's 9 innings in the game. We're now 6 years in this bull market. You never know until it's over, but we're probably in the 7th or 8th or 9th inning of the baseball game. That's usually a bad time to own financials. Number 5, the time to buy financials is after the market's been crushed. Number 6, we base our decisions on adjusted return on equity, ROE, as opposed to stated ROE, because the stated ROE doesn't take into account the difference in the dividend policies of all these different companies. Number 7, first we look for companies with a return on equity, ROE, greater or equal to 20%. Second, we look for companies in that high ROE group that are sustainable based on the competitiveness of their products. Third, we assess management's ability to allocate capital at those companies. Once we validate those 3 things, we typically find companies that we can invest in. Number 8, return on equity can be broken down into 3 pieces through DuPont analysis. You've got good ROE and bad ROE. We want to make sure that the ROE is good return on equity. Number 9, you can fake good ROE in 1 year, but to achieve high ROE 7 years in a row is tough. So when I see a company that has achieved an ROE of 23, 22, 23, 24, 23, and 22% over the past 7 years without even knowing what industry they're in, I go, wow, there's something in place here. Number 10, if you're thinking of investing in 2 companies and you run the numbers over the last 7 years in both companies and you put them side by side, the good company will leap off the page at you. Number 11, the great enemy of a high ROE company is competition. Number 12, most of the companies we own have people running them that are very good capital allocators. Because if you can keep your ROE over 20% year after year, you almost by definition are a good capital allocator. Number 13, our biggest tool for risk mitigation right now is put options on the TSX. That's an insurance policy that won't protect me from a 30% correction, but it should protect me from a 10% correction. Number 14, in Canada, the mid-cap segment is probably the most inefficient part of the market. Number 15, measuring growth in terms of return on equity and book value per share is a better methodological way than measuring growth in terms of earnings per share. Number 16, if you focus on companies where the net worth of the business is growing at a very steady clip, then the share price chart will take care of itself as long as the ROE stays intact. Number 17, if you're a good stock picker, concentration works in your favor. And if you're not, you should own an ETF instead. Number 18, we don't buy turnarounds. It might be because we don't have the muscle. We wouldn't own enough stock to be able to push for a turnaround at the company. Number 19, I continue to look for great companies that are fair price as opposed to cheap stocks. 20, if you want to be a great investor, then study the great investors and pick one that fits your style and then master that style. 21, Your style of investing has to fit your personality type. Finally, 22, I'm buying companies and just hoping they'll be awesome forever. I get to hang out with the really great CEOs all the time, as opposed to having arguments with mediocre CEOs who aren't doing a very good job running their companies. Thanks for watching, everyone. Please subscribe to my channel for new videos. Visit my blog on robinspeziale.com and buy my book, Market Masters. Happy investing, everyone.